right, let's get straight to Sacchitanand Uttekar from Tradebulls for a technical check. Sachi, what do you think? Be brave and buy, or stay away for now?
Good morning, Nigel. Good morning, Mangalam. I think when we look at the entire structure, the structure is clearly indicating weakness. This is the fifth downward gap that we have seen on the Nifty since it break below that 25,000 mark, which also marked a breakdown below the 200-day exponential moving average. So I think the pullbacks that we have seen so far are very fragile. Nifty has been reacting from its 5-day exponential moving average resistance. And so far, we don't have any, meaningful signs of a bottom in place. So even the level at around 22,955, which we have seen so far, I think that particular level is also at threat. If you look at the relative strength indicators, there is no sign of any divergence. So probably we may see this particular weakness getting continued. There would be, temporary pullbacks within this particular trend, but major trend or the major thrust still remains on the downside. So it's better to, be cautious. Put some, cash on the sidelines. Probably in a week or so, we may get these better opportunities to invest. But from a trading perspective, there are certain pockets of strength which do give us the opportunity to trade on the positive side for a couple of trading sessions. But the major trend still remains weak. So it's better to keep a long-short combination when you're trading.
All right. Keep a long-short sort of combination when you're trading. What do we go long on? What do we go short on, Sachi? Because, the trades that were doing well earlier, and you would have hoped to carry them, are getting unbound right now. And the trades that weren't doing very well over the last few trading sessions are now doing a lot better. So how do you mitigate that? And what would your top trading ideas be today?
Good morning, Mangalam. Mangalam, I think the rotation has been very significant. We have not seen, follow-through moves, getting continued for more than 2 days. But if you look at the relative strength performance of certain pockets, these indicators are giving us strength to go long on a couple of trading stocks from a trading perspective. Now, one particular idea that we have recommended to our clients to go along is DMART. Now, if you look at the weekly charts, since last 4 weeks, despite of the market volatility, the stock is trying to form a base near its 200-month exponential moving average support, which is somewhere close to around 3,800. Yesterday as well, we saw a bullish bell-toed formation on the daily scale. It's a good, reversal candlestick formation. So probably we may see a range-bound action within this particular stock. We may see a quick move towards 3,900, 3,940, and that's why we are recommending building long positions here in DMART. One can keep a stop loss at 37.80 on closing basis and review the positions at around 39.40. On the short side, clearly, I think financial space is very vulnerable, and even here, Bajaj Finance is in a severe downtrend. The 960 support has also been breached, and 860 support has been breached in today's session. If you look at the overall structure, it looks like a bearish flag formation breakdown. We are expecting that the stock may slide towards 790 zone in a couple of trading sessions. But from a trading perspective, one can keep a stop loss at around 862 on closing basis and expect an immediate move towards 830. Even this is something that we have recommended to our clients. So a sell call on Bajaj Finance and a buy call on DMART.
All right, got it, Sachi. Thanks a lot for that. Well, by the way, Reliance Industries